Welcome to weekly view on markets. Markets consolidated during this week after a good rally in the previous week. Volatility has reduced in the market. Mid cap and small cap stocks have outperformed during this week. Markets may consolidate in the coming week as well. Trump tariff deadline of 90 days comes to an end during this week, and funds by the US government will have impact on markets. Technical charts also show consolidation pattern. Quarterly one results of the companies will start coming out from this week. Results and future guidance by the management of the companies will have stock specific and sectoral impact. Indian economy is doing well, going by the high frequency data and macroeconomic indicators. Continuous fund flow is observed into the markets by DIIs as FIIs. Considering all these factors, markets are set to scale higher levels in the coming weeks. Investors are advised to remain invested. Nifty closed at 25,461 with a loss of 176 points for the week. Bank Nifty lost 412 points and closed at 57,031. Mid cap and small cap indices outperformed during this week. Mid cap index closed at 59,677 with a gain of 292 points. Small cap index closed at 19,033 with a gain of 56 points. India VIX has cooled off, it is at 12.31. Most of the sectors gained during this week, and few sectors like realty, NBFCs, private banks, FMCG, auto, and energy they lost 1 to 2%. Consumer durables gained the most, that's 2.77%. Healthcare, pharma, PSU banks all gained around 2%. Oil and gas, information technology, media, manufacturing all gained around 1%. Commodities gained around 0.47%. Public sector stocks gained around 0.31%. So there were more advancing stocks compared to the declining stocks during the week. The overall market breadth was positive. So even though there is a slight negative closing on Sensex and Nifty, the overall market is quite positive, and this positive momentum is likely to continue in the coming week. We may not see big rally, but it will be a kind of consolidation in the coming week. Now let us look at the technical charts. This is the daily chart of Nifty index. You can see here the major resistance at Nifty index was at around 24,800. That has been crossed, and Nifty has gone to around 25,500. After that, it has slightly dropped from that level during this week. So as long as Nifty holds above the support line, I have a positive view on the Nifty. It is likely to consolidate for a while and again resume its uptrend. This is the daily chart of Nifty Mid Cap Index. Mid Cap Index also is trading between this previous all-time high of 60,750 and the support is at around 57,200 levels. As long as Mid Cap Index trades above this support line of 57,200, technically it is a positive, and Nifty Mid Cap Index is likely to go to the previous high levels in the coming week. This is the chart of Nifty Small Cap Index. Small Cap Index has just closed around the support level, and Small Cap Index is likely to consolidate and ultimately Go to the previous high. Previous high is at around 19,600 levels. This is a chart of Bank Nifty index. As long as Bank Nifty index remains above this support level of 55,300, I have a positive view on Bank Nifty. It is likely to pull back, and quarterly one results of banks are expected to be good. Their asset quality is quite good condition. Ultimately, I expect Bank Nifty to move towards 60,000 levels. Now, let us look at some of the fundamental macroeconomic indicators. RBI forex reserves have gone to record level during this week. It is at 702.8 billion US dollars. It is up by 4.8 billion dollars during this week. This is a very good foreign exchange reserves with RBI, which gives fundamental stability to the Indian economy. Foreign exchange rate is at 85.39 rupees per dollar. The dollar index has further come down at 96.29. So that is the reason that we are seeing appreciation of rupee. Overall, the dollar demand is coming down. So dollar index is at record low level of 96.29. Brent crude price is at $66.5 per barrel. So if Brent crude price remains below 70, it is good for oil marketing companies. We are seeing buoyancy in the oil marketing companies' stock prices for the last 2 weeks because of low oil prices. Gold is at 98,830 for 10 grams 24 carat. As many wars and other things are heading for ceasefire and long-term peace agreements, the gold prices are likely to be subdued in the coming months. FIIs sold 6,604 crore during this week. DIIs continues to buy. They have bought 7,610 crore in the equity during this week. Auto sales figures for June month have come, but they are flat to positive. There is not big increase in automobile dispatches from factories. So, but of course, this is on a large base. So even 1 or 2% growth is a big growth for automobile companies. GST collections has come at 1.84 lakh crores. It is up by 6% year on year. So the growing GST collection indicates that industrial and commercial activity is going up in the economy. PMI index is also indicating the same thing. Manufacturing PMI index for June is at 58.4. It is at a quite a higher level, indicating expansion in the industrial sector, manufacturing sector. And services PMI is on above 60. It is at 60.4. Services industry is definitely growing much more than the manufacturing industry as per the PMI index. And this, along with GST collections, indicates that the economy is doing well in India. Charts also show consolidation after the recent rally in the previous weeks. Consolidation may continue in the coming week as well. Quarterly one results will start from 10th July. TCS is going to announce the first result on 10th July. It will be a trigger for the markets. If the results and guidance of the companies are good, we will see higher levels in the market. Mutual fund investors should remain invested. They should continue their SIPs and they will get better returns in the long term. So this is all for this week. If you like my video, please subscribe to my channel. You can refer to your friends. You can ask your questions. We will meet again next week. Thank you.